Hello everyone, my name is Vikas Bohra and my today's presentation is on my time series analysis of Tesla stock using ARIMA model. A quick background of the company before I begin. Tesla is an American energy and automotive company founded in the year 2003, and it's currently headquartered in Palo Alto and California. The company was formerly known as Tesla Motors, and it changed its name to Tesla Inc. in February 2017. Tesla as a company designs, develops, manufactures, leases, and sells electric vehicles, energy generation, and storage systems in the United States, China, Netherlands, Norway, and internationally. On June the 29, 2010, Tesla Motors launched its IPO on NASDAQ at a price of $17 per share. And this is the price as on April 13, 2020, $650.95. And this is the Tesla logo. Elon Musk, who is the co-founder and CEO and director of Tesla. And these are the other key executives associated with the company. Well, my objective in this Capstone project is to use time series analysis to analyze data of Tesla Motors to understand and forecast the trends of their stock price. The data of Tesla Industries is for the past 5 years that I'm using, from April 2015 to April 2020. And the data will be analyzed in our studio with the time series analysis using ARIMA, which is autoregressive integrated moving average model. Well, my analysis is to forecast and generate predictions of future trends. And one of the main purposes of this project is to get people to make good investment choices by using the right tools and models to forecast the future stock of Tesla based on the previous data points using our studio. These are the steps involved in my data processing. I've gathered the data that I needed. I've inputted the data in the R studio. I have plotted the time series, then decomposed the time series and created forecasting using the ARIMA model. And about the data, I inputted the Tesla stock data using the QuantMod package, which is the quantitative financial modeling framework. And with help of that, I used the GetSymbols function to extract the financial data directly from the source, Yahoo Finance. The data contains all the trading dates, real-time stock prices with the opening and closing, and the exact volumes of the stock traded. And these are the packages that I've used for my analysis. And here is the get symbol I was talking about here. That was used to retrieve the data from the source Yahoo Finance from the start date of April 15, 2015 to the end date of April 14, 2020. And the frequency recorded in the data is 1, which is because it collects the data on the daily basis. And I didn't find any missing values. And these are the summary of the data and the variables. Well, here is the part of the inputted data from the Yahoo Finance in R using the GetSymbols function. And for this analysis, I only needed the closing price of the Tesla stock because, that's the final price at which a security is traded in the stock market. And I implemented the codes to only extract the date and the closing price variables of the Tesla stock. And here is the finalized set of the data. And using the XPS and Zoo libraries, I created the time series object in order to get the line chart of the closing price that I extracted in R. And I also copied the plotting for the exact dates from Yahoo Finance on the right. And you can see the fluctuations of these two charts are same as the one found in NASDAQ or Yahoo Finance, which means that there was no error in extracting the historical data, nor in implementing the code. Well, next, volatility. Well, you can call volatility as the price movement or risk, and I wanted to check the volatility in the Tesla stock price. And to calculate volatility, I wanted to find the true range of the stock on every 24 hours trading period and calculate the percentage change using the lag function. And after calculating the percentage change or the averages, I plotted it, and we can see how high volatile the Tesla stock is. And now that we have the volatility plotted for 5 years, it is now useful to think of volatility as the annualized standard deviation. And here I received the standard deviation of 3.287. And from the histogram, we can find the distribution of the performance of the stock. Well, using the time series decomposition function allowed me to extract distinct components from the time series data and sort out the seasonality trend. I selected the frequency as 21.62. As you know, that is the average working market day in a month. And decomposition function destructs a time series data into seasonality trend and, the seasonal and the trend components. Well, observed is the original plot, which is the observed value. And then we have the trend, which tells us if the movement is upward or downward. And the seasonality component, which actually finds a regular occurring pattern here. And here I plotted the trend component in the Tesla closing price, which is noticeable that the stock has been in an upward trend for the past 5 years. Well, in this part of the analysis, I use the auto ARIMA function as it runs the autocorrelation function and detects automatically where the lag stands out and records those values as per the ARIMA parameters. And after running the auto ARIMA function, we got the parameters of 011,001 for the PDQ values in the AIC and the BIC from these following fitting models as the best ARIMA model. And here you can see that the AIC and the BIC values are lowest from all of these possible models, which makes this the best model to choose. And from the earlier parameters received on auto ARIMA as the best model, I plotted the forecasted values and I selected my accuracy to be at least 95%. And 21.62 as my days again, which is the average trading or working day in a month. So yes, I'm forecasting the price of Tesla for the next 30 days or a month. And this is what auto ARIMA has forecasted for me using the best model possible. And next, I wanted to check the accuracy and the fit for the forecasted model, as I, had set the accuracy in my forecast to be at least 95%. And as per the forecasted model, the MAPE, or the mean accuracy of percentage error, is 97.8% accurate, which proves to be the best model. And next, I plotted the Tesla stock price with the forecasted fitted line in the same plot. And we can see clearly that they almost overlap each other accurately. And here, I'm comparing here the actual Tesla stock chart from the past 3 days from Yahoo Finance with the forecasted plots. And the data I used here had an end date of, April 13th, which is here, 2020. And the ARIMA model forecasted that the stock price to go up from, the recorded price on April 13, which was $650.95. And on the right, again, the Yahoo Finance trend, we have a closing price of the Tesla stock as on April 14th as $709.76. And we can observe from, the auto ARIMA forecast that most predicted values are close enough to, the real values, which means the function auto ARIMA return good forecasted values for us. Well, to conclude, Tesla stock price data using the ARIMA model, I can conclude that most of the forecasts that were made for 1 month are close to the real values, and the percent difference between the values are very small. However, despite of having accuracy with these numbers, there are a lot of things that can change here. Like Elon Musk can continue tweeting and create fluctuations in the stock price. The ongoing China trade war with US. There could be changes in tariffs between US and China. Tesla has a gigafactory in Shanghai in China. Also considering the current pandemic situation, which could change everything, and that's big time in stock market. And there could be natural disasters, accidents, competitions, any controversies. So yeah, the best way to use the forecasting is to, get the directional trending from it, whether it's in an upward trend or a downward trend. So if I was to buy the Tesla stock today, I would look at this and, say, most likely, but not guaranteed, it's going to go up in the next 10 days or 30 days or a year. I hope this was informative and helpful. Thank you.